I'll say it really depends on what you're trying to accomplish, what type of investments you have. There are people out there who are trying to do very, very specific things. They want to have very specific private equity type funds. The way we do it is we basically bundle our investment management into our flat fee. That way there's not, an additional cost. We don't like that setup. I've worked that way in the past. Hey, we're going to charge you this, and we're going to charge you this, and we're going to nickel and dime you, and it's going to be a percentage. We don't do it that way. Basically, what you see is what you get. You play the flat fee. If you want us to manage all the accounts, great. If you want to manage one, that's great too. Typically, what you'll see, if you just go to XYZ financial advisor at a big company, you're going to see a percentage fee. It's usually around 1%. The reason we didn't go with a model like that, I just have a personal bias. I think it unfairly punishes investors when the market goes up. If you have, let's say, $100,000 invested and you're paying 1%, it's $1,000 a year. And let's say the account grows through the market, that 1% now becomes an even higher fee. Well, the advisor didn't make the market go up. You shouldn't be punished for the fact that the market went up. Now you have to pay more. I don't see things that way. I don't think this should be done that way. But then the other side of that coin is it sort of creates this environment where the advisor is incentivized to collect, right? They want to collect as much of your money as they can, have it sit in the investment accounts, the stock accounts, basically because the more of your money they have, the more money that they'll make. I'm glad we don't do things that way. We work with a lot of people who are real estate investors. They need that cash. They're buying houses, they're selling houses, they've got rental income. It fluctuates. I just think it's a lot cleaner, to have that flat fee. Everyone knows, what the fee is going to be. If you find a side hustle you want to invest in or a rental property you want to buy, I can say, hey, great, let's do that. I can advise on it. The fee stays the same. It puts me in a place where I don't have this, conflict of interest, and I can help you with what you're trying to do. I guess the last thing I'll touch upon here is that's sort of the advisor fee. There's layers of fees is something to think about. If you are paying an advisor 1%, they're investing in funds. Like we talked about earlier, you want to look for funds that have expense ratios under 0.2. So something we see a lot is people are paying their advisor 1% and their advisor has them in 20 different funds that are sort of an average of about 1% expense ratio. So now you're paying 2% when really you should be paying 0.2. Don't let that happen to you.